Good day, and welcome to the introduction for our class, Accounting 145, Individual Income Taxes, both federal and California. And the California is very important to us because we need approximately 25% of our time spent on California income taxes, and we'll do that with the bottom line of you being eligible to get your CTEC license. This is me. Hopefully you won't have to be looking at me much more, and especially this is the benefit of doing an online class. My name is Alexander Frazen. Just call me Alex. So, I received my Bachelor of Science in Business Administration with a major in accounting. Boy, that's a long title. From even longer title, actually, California State Polytechnic University, Pomona, and that was back in 1978. I've been licensed as a CPA in public accounting in California since 1981. And I've continually practiced for the last 38 years since 1978. I have a master's degree in accounting and financial management, and in addition to public accounting, currently I'm a full-time accounting professor at the University of Redlands, a small liberal arts college up in the Inland Empire. I also am a chartered global management accountant, just things you can pick up with experience. So, I've taught income taxes, both individual at the following colleges since 1982. University of Redlands, La Sierra University, Cal Poly, Cal State University, San Bernardino, Chaffey College, San Bernardino Valley College, and now Miracosta. So this is not my first rodeo. I've been around for a little while. So what have you gotten yourself into? Let's talk about the Internal Revenue Service for a little bit. The things you ought to just be aware of. They processed some 237 million returns in 2012. We don't have updated numbers for the current. Taxpayers spend about 3.8 billion hours annually complying with federal income tax laws. That's a lot of time. Identity theft is on the rise, and you can see where this causes a problem for the IRS, that they've had to double their number of workers in this specific field. The revenue collected has increased by a factor of nearly 27 since 1960. 1.5 million tax-exempt organizations in the United States recognized by the IRS, most of which have to file a Form 990, a nonprofit organization return. The U.S. tax code. Why would we expect anything less from Congress? 3.7 million words, 70,000 pages. And of course, by the end of this, I expect you to have them all memorized. Tax audits, commonly conducted in a reverse bell curve based on adjusted gross income. And they tend to look at middle income and more income rather than low income, because low income, just obviously there's not enough. If you find something, you're not going to collect much. It's not very much a cost versus benefit rule. Form mistakes are more than 41 times more common than paper mistakes. And what that means is that those who file their tax return on paper have 41 times more an error rate than those who e-file. And the primary reason for that is when e-filing, the return has been prepared by a computer, and the computers primarily always add and subtract correctly. People that do paper returns, not so accurate. The IRS is comprised of nearly 95,000 workers, and I'd sure be happy to see that turned down to about half. And 2/3 of them enjoy working for the IRS. Of course, they're working for the government. They would recommend it for a friend. Now, one of the things you'll learn is there's the 16th Amendment to the Constitution of the United States, and it was passed in 1913, giving Congress the right to levy and collect taxes on income. But U.S. taxes actually started back in the Civil War. It was costing the North approximately $2.5 million a day to fund the war, and they needed money. So with that, and where they've grown today, You can make big money by reporting a company or an individual for tax evasion, up to 30% of the amount collected by the IRS. So as I say here, it's okay to turn your neighbors in. 89% of the world, or the United States population, do not believe it's okay to cheat on your income taxes. So quite typically, you'll get the neighbors, one of them is cheating on his income taxes, the other is not and scrambling to make a living. And they turn around and they will turn their neighbor in. They get so mad because the guy is always bragging about how he's cheating on his income taxes. Americans spend 7.6 billion hours every year preparing taxes. That's why we're here, to get them to pay us to spend that time. Americans spend $27.7 billion every year on tax preparation. We only want a small piece. Now, the IRS is a powerful organization, and many U.S. presidents have used the IRS to harass and audit opposing groups, parties, individuals, etc. Who knows where that'll go in the next 4 years. There is a special division if you decide you ever want to go to work for the IRS. These people actually carry a real badge and a gun. They're called the CID, or Criminal Investigation Division. And when they come out, they are there not to audit you, but they are there to put somebody in jail. So they are there for the major tax fraud cases, etc. Tax evasion, most prevalent in the world of babysitting. And basically it's trying to keep that babysitting cost down. If a babysitter sits in my home, then I am in control of them, and they're an employee, and I have to pay payroll taxes, workers' comp on them, etc., driving the cost up. If the babysitters take care of them in their own home, then they don't want to pay the income taxes on it, so they don't let me claim what will learn to be later a child care tax credit, because they don't want to pay tax, and I don't want to pay more, so I'm willing to oblige by not declaring the money I pay to them. Legitimate babysitting places like a preschool or a daycare center, they will provide you with a federal ID number, and they don't mind you claiming them, etc. Now, the next heading I've given here is tax evasion, and it's just not for the common folk. Who does it? All walks of life. Richard M. Nixon, before his resignation, there was a president of the United States. He was known as Spiro T. Agnew. You can look up, he had a watch after him that was quite popular the day. Well, he ended up resigning in disgrace. Right after he resigned, he pleaded no contest to federal tax evasion. And then we know the history from there. Gerald Ford replaced Agnew as the vice president. And then when Nixon resigned, Gerald Ford became the president of the United States. Darryl Strawberry, many of you might remember him or know of him. He was a second baseman with the New York Yankees. And he pleaded guilty to tax evasion. And basically at that time, and I believe the charge was about $5 per baseball. And he was at these sports memorabilia shows, and he was signing these baseballs for $5 each and not declaring the income. Wesley Snipes, we all know as the actor, and he spent 3 years in federal prison for willful failure to file an income tax return. Chicago gangster Al Capone, and if you've ever watched The Untouchables, Elliot Ness couldn't put him into jail for prostitution, running liquor, etc., but it was the IRS with a charge of income tax evasion that put him away. And of course we all know Martha Stewart, who went to jail on obstruction of justice charges. But before that, she was forced to pay a mere pittance of $220,000 and back taxes and penalties to the state of New York. Richard Hatch, if any of you remember watching the original Survivor show, the #1, and this was like 30 years ago, he won $1 million and did not declare it as income. His claim was that CBS agreed to pay it. He was found guilty of tax evasion and sentenced to, and only served part of a 6-year prison sentence. Of course, he returned for a third prison term for failing to file amended tax returns. So I guess he's a complete loser 3 times. Hollywood Madam Heidi Feiss was sentenced to 7 years on tax evasion charges because she ran a high-profile prostitution ring. And her excuse, it's a bit challenging to pay legal taxes on illegal earnings. And my answer is here, did we not learn from Al Capone? If you have illegal income, you are to report it. You have to pay tax on it. And they cannot use your tax return to convict you of the criminal charge, for instance, in this case, being a madam. Pete Rose, we all know Mr. 3,000 hits, who can't get in for gambling, can't get into the Hall of Fame, but he spent 5 months in prison for failing to report complete income. Richard Pryor, and I love his excuse, served 10 days for tax evasion, told the judge, you know, I forgot. Finally, Joseph Noonan Jr. was a former commissioner of the IRS, and he was found guilty of failing to report $86,000 in personal income, and including $1,800 he won after betting Truman would win the presidency in 1948. So the top man at the IRS went to jail for income tax evasion. The Supreme Court in 1927 ruled that illegally earned income was subject to income tax. And they rejected the argument that the Fifth Amendment protected criminals from reporting illegal income. So back to what I said earlier, illegal income, you got to pay tax on it. Some useful websites, and you will be needing to get into them, is the Internal Revenue Service, which can be found at www.irs.gov. The California Franchise Tax Board, which is at www.ftb.ca.gov. And then CTEC, the California Tax Education Council, which is at www.ctec.org. So make a note of all of those, and you will be visiting them frequently, probably. Some useful federal publications, and I would download these and have them in front of you at any given time for preparing tax returns. Publication 17, A Tax Guide for Individuals. And this is a great reference material. It's a couple hundred pages long. You probably want to print it out because it would be a great thing with the index to have and be able to use in exams and just preparing tax returns. Then there's publication 334, which is more focused as a tax guide for those with a small business. Okay, if you have not done so prior, need to go back. Now would be a good time to download the 1040 for 2016 and have it in front of you and print it out before we go further. So simply Google 2016 Form 1040 and you'll pull it up there. And what we need to do is look at things to get that going. So we'll give you a minute. Or better yet, you can pause this. And you'll get the 1040. It's a nice little bluish green and white form. You don't need the color in it, even to file it. It can be black and white. That is fine. The main body of the 1040 is contained in 2 pages, as you can see here, although you can't read them, but I do want to break it down a little bit before we get into chapter 1. To start off with, the first part of the form is just the basics: your name, your address, your social security number. If you're married, you have to report your spouse's name and their social security number, even if you're married filing separate. And then if you look down in that right-hand little box to try and spread the money, well, I'll go first up here. Tax year, most individuals have a December 31st tax year. So you don't need to fill in anything here because you'll notice it says for the year January 1 to December 31st. However, if you ever get a client that has a different year, and you'll notice how this form reads, beginning on blank blank, so it would say April 1st, 2016, and then it would be ending on March 31st, 2017. Anytime you have an odd year, the form number, the 2016 form, corresponds with the first day of the beginning year. Down here, just a little box. You can check it one way or another. I just like no, or I don't check it. But you can elect to have the government on your behalf or on their behalf contribute $3 to the presidential elections campaign. And this does not raise or lower your income taxes. It probably just puts more worthless TV for us to watch every 4 years. The next two parts of the return, and there'll be some of the things we'll be studying first, is filing status. And filing status determines a lot of things, the tax brackets, phase outs, etc. And you will note that there are 5 filing statuses, and these are all determined basically on the last day of the year. You can be single. You can elect to file a married filing joint return with your spouse. You can be married filing separate. You can be head of household. And you can be qualifying widow or widower that has a dependent child. Now, we'll learn about all of these in the next few weeks. And then exemptions. And the exemptions typically we think of are children, but they go a long way beyond children. It could be moms, dads, it could be a live-in spouse even, so aunt and uncle, even just a friend. And every exemption saves us some taxes because it gives us a deduction of a little over $4,000. So individuals you're able to claim as your dependents, parents, children, etc., but not your dog, cat, or goldfish. Any items of income you have will go on lines 7 to 21. They go nowhere else in the return. So any income you have shows up if it's taxable in these first 14 lines or so. For instance, you have gross wages on line 7. You have state refunds on line 10, credits, offsets state and local income taxes. Under some circumstances, and we'll learn about that a little later, if you have deducted state income taxes in one year and you receive it in a refund in another year, it is taxable to you as income, and we'll explain that further down the road. If you have a sole proprietorship, your net income goes here on line 12, followed in with a Schedule C that accompanies that information. Now, this is not shown gross like most items. It is shown net of your business expenses. Over on lines 15A and 16A are your IRA distributions or pension and annuities, and the total distribution goes inset, but the taxable amount, and you'll find out that it's not always all taxable, goes on lines 15B and 16B. And similarly, Social Security. If you're a high enough bracket, up to 85% of your Social Security can be taxable. So you would have 100% where I have the total amount, and then whatever the taxable portion is would show up over on line 20B. Down here we have, and it says adjusted gross income. Well, these are really statutory deductions. Now, you'll notice that at line 37, it tells us this is your adjusted gross income. And so in the trade, we refer to this as the line. And the deal is all income is going to be above it. We've already said that's on lines 7 through 22. But we can have deductions above the line. And those deductions above the line are referred to as deductions for adjusted gross income or in arriving at adjusted gross income. So they are above the line. And also remember, our expenses, for instance, on our sole proprietorship are deducted against our sole proprietorship income. Those deductions are above the line. So remember the term for AGI or in arriving at AGI. You'll notice here, deductible part of self-employment tax, and we'll explain that one to you further, but it will be half of what you show on the line 57. So put that in your mind for future reference. Now, you'll notice that we move on to page 2. We start the top with adjusted gross income, which was the last line on page 1. And then if you'll notice line 40, it says itemized deductions or your standard deduction. You don't get both. But these are our deductions from AGI. So the other line items are for, these are from. And then we will subtract out our exemptions on line 42. And then on line 43 is our taxable income. And that is the amount that we pay income tax on. After that, we figure our income tax on line 44 through 47. And then we have credits. And you'll notice that I say they are non-refundable credits, which means if your credit is larger than your income tax, you don't get any benefit beyond that. And if you look at line 56, you'll notice it says subtract 55, your credits, from line 47, your income tax. And if it's more than that, enter 0. So you cannot get a negative number in there. And what this also means is the next 8 or so lines, line 57 through 63, is labeled as other taxes. And these other taxes line, those non-refundable credits, will not be able to offset them. And you can see a variety of them: self-employment tax, etc., additional tax on IRAs, and again, we'll talk about those in the weeks to come. So other taxes besides your income taxes. And then finally, your payments and refundable credits go down in these last items. And so, for instance, your federal income tax withheld is money you've already paid on your income taxes. We all know that from our W-2s. If you have a lot of self-employment income or a lot of interest income or non-withholding income, on line 65, we may be required to make estimated deposits of our income taxes. And then line 66A, which is the big one, the main one, is the earned income credit. And this is a credit that is basically set up for low-income people with or without children, a lot of restrictions to make. And if you get this credit, and if the credit exceeds your income tax, the IRS will mail you a refund check for it. And then finally, your refund or dreaded balance due, if you have that. And then your personal information. And when I say your, the first lines are, it says sign here, and that is for the taxpayer and or the taxpayer's spouse. But down on the last 3 line items, you'll see your firm preparer's name. So my firm is Alexander L. Frazen, CPA. The date that you signed the return, and then your signature, and then the firm's name and the firm's address. And if you'll notice over on the right, it says PTIN, and that's a personal tax preparer's identification number. In the days gone by, we used to have to put our personal social security number on there. Well, obviously with identity theft, etc., we no longer have to put our personal social security number on, but you have to apply with the IRS to get a PTIN. And that concludes our introductory session. So if it's raised any questions, give me a shout, give me an email, or whatever. I look forward to seeing you or talking with you in the future weeks. Thank you very much.